share markets finished the third quarter largely in the red, with major indices across Wall Street, Asia and Europe posting single-digit declines. Australia's market was flat in the 3 months to September, but the NZX Top 50 index added a 1.8% gain, coming out in the green for the period. To discuss why that could be, I'm joined by Jarden Director of Equity Research, Adrian Allbon. Adrian, thanks so much for joining us.
No problem.
Why was our share market spared?
Look, I think it reflects two features. One is that we have got a high skew of defensive companies that pay dividends, and those dividends definitely, in a down month across the globe, they definitely count for something. I think the other feature is when I look at the winners and losers across the third quarter, definitely the recovery orientated stocks, in New Zealand in particular, A2 Milk, fared the best and provided trading updates which were better than expectations, so that was pleasing.
And in the macro environment, what do you think is causing these losses that we're seeing on share markets around the world?
Well, I think as you come back across the year, like what we're finding, whether it's across interest rates, the inflation debate, whether it be compounded into currencies, whether it be oil, whether it be freight rates, whether it be wage inflation, they're all been volatile and from period to period quite difficult to sort of pick the next period, and that's made it hard for stock pickers this year, and the macro debates have dominated sentiment.
On interest rates specifically, they're rising not just around the world but here at home as well. What risks does that pose to our large listed companies?
So look, I think from a funding perspective and ability to roll the debt, we're pretty well placed across the NZX 50. I think where the concern is sort of drifting towards is as central banks pull the handbrake up on demand to try and curb this inflation debate, there are pockets of companies which have a higher exposure to either house prices, which continue to sort of fade, and also future dents on people's discretionary incomes from a consumer perspective. Fortunately, from a New Zealand index perspective, that is not a huge proportion of the overall index, but nonetheless, like that will be a key watch out as we travel the end of the year and into next.
Thanks so much, Adrian.
You're welcome.